Welcome back to another weekly market breakdown. I've been doing this for a month now. A lot of the positions I've been forecasting have been playing out. So hopefully you've caught some winning trades, and we're just going to break down another node of pairs up here and we're going to get on with it. And we're going to start with Euro AUD. And so what we're looking at on this pair is we've had this clear push down in price here, and price has pulled back to the Fibonacci level up here, and then we've started to push down again, and we're just starting to pull back to this Fibonacci level here. So I'm looking at both of these levels for some sells to see how price reacts to those levels. But the key thing is that I'm looking at sells on both of these levels. And a lot of traders, if they have two levels in, they won't take a trade here because they'll tell themselves, oh well, there's no point taking a trade here because price could push up to this level here and then I'd have a loss. And they're fixated on that 1% loss, and they don't even look at any trades they might get here because they're just so too scared. And that's something that I used to do a lot. I would be fixated on, oh no, I don't want to lose here. I'll just wait. I'll tell myself, I'll just wait. I'll wait for price to get up here. I'll miss this one and I'll just wait for it to come up to here because I was just too scared of losing. And what would happen so many times is that price would just drop from here. And although I've gained, not losing that 1%, I've also missed out on a 6-7% trade. So I had to figure out why and how to stop doing that. The thing is, if this level here I know has got a lower strike rate, if maybe it only works 30% of the time, then yeah, sure, you don't want to be taking too many trades at that level. But if there's an 8% chance this is going to drop and a 60% chance this is going to drop, I'm still very happy to take trades at that level, which is why I'm willing to take trades at both the levels. And so that's exactly why I've actually taken a trade on this pair so far, and I actually took it last night. Well, I just set the order on the break last night and I woke up and I was triggered in. So let's drive into the 1 hour and look at the entry. So as you can see, price come up to this level, almost hit the level. Obviously, most of these levels you've got to remember are like zones. I'm not expecting price to hit dead on and then drop. I know that it can come close. It's only what, 2-3 pips away? No, 11, okay. But it's not far away. And I know that price can break above, then push down, and it can just miss or hit dead on. I'm not bothered. I'm just sort of playing the area, more or less. And price is impulse down, so I waited for the impulse, and I was just waiting for a clear correction. Price gave us this sideways movement, and about 12 o'clock, I think it was, I saw that I wasn't going to be awake when this was probably going to drop out. So I just set the order on the break and let price do its thing. And that's exactly what's happened. I think we're at like 2.5% profit a run at the minute. But if you aren't in the trade and you're looking to get into the trade, all you're going to want to be looking for is for price to pull back a little bit deeper maybe, and then look for the entry there. And also price could quite easily come back up to the level up here. It doesn't have to just drop from here. It might just pull all the way back up. We could come back up here for a double top, or we could just come up to here and hit this level here and then drop. So that's what you want to be looking for if you're not in the trade yet. But you just need to be willing to take all the trades in your plan rather than just being worried about taking a small loss here and then missing out. So that's Euro AUD. Next pair is Euro USD. And what are we looking at? So on Euro USD, I've been covering this pair pretty much every week, to be fair. We've taken a couple of wins. And you can see that we've had this overall massive move, and price is starting to form this quite deep pullback, and we're looking for price to hit one of these Fibonacci levels before possibly pushing up to the upside, maybe up here. But at the same time, we're also looking for sells to these levels if price lets us do it. So let's just shut that. So what can we see? We can also see that we've had this clear push down here. So I've got my Fibonacci levels on here to look for maybe price to hit that level before pushing down here before we finally push up. So if I drop down to the 1 hour, because there is something you need to be aware of. So in the 1 hour, we can clearly see that price has actually hit the third Fibonacci level and started to push up. So now technically, how do I know whether to look for sells or how do I know to look for buys? Because I've got a bias of both here. Price could hit this level or price could push up from this level. So all I do is I let the market tell me. I just let the market tell me with its price action, am I looking for sells or should I be looking for buys? And I just take according to that. So as you can see, at the minute we've had this push up And we've got this really messy price action, if I'm honest. But what's happened is we've pushed up, we hit this level, which I'm not really interested in at the moment because there's nothing in my plan here that tells me to get involved. But we've pushed up from this level, so technically we can be looking for buys. But it is so messy and there's no clear pullbacks. The only thing that is a possibility is price has pushed up. We've had this massive drop and, you know, catching a lot of people on the wrong side, and price has now come back down to the double bottom of this Fibonacci level. So if we actually get a push up from here, oh, where's my pen? If we actually get a push up from here and a pullback, I will be looking for an entry because that will tell me that we are still possibly going up. Because that would show me that there is a possibility that price is going to push up from here, because we've had this massive drop catching people on the wrong side. We started to push up, we're going to come back down, fill the wick and then push back up possibly. And the other way we could look to get involved, maybe for a sell, is if we do push back up but price isn't impulsive and we start to get really corrective price, we come up to the double top of this trade, is I'll probably take a sell on the rejection if it's corrective. If not, I'll look for the retrace and then the pullback, and then I'll look for a trade to take down to these levels here or here. So they're the two trades I'm looking at for that. Key thing is to not be worried about taking multiple or being able to switch your bias. If the market tells me that there's a high chance that we're going to be selling off, then I'll look for that. If I just absolutely smash through there, then no, I'm no longer looking for a sell, because price is telling me that, because price is telling me that there's not as high a probability that we're going to drop down. So I just change my plan according to what price tells me. I don't get fixated on what I originally thought or get biased towards one direction, because that way you're going to get humbled quite quickly if you think you know what's going to happen. So that's that trade. The next pair is Aussie CAD, and on Aussie CAD, another quite deep pullback, and so you can see we've had price push up and we're just starting to come back to the levels down here. Now price hasn't been really impulsive on the way down. As you can see, we've had quite a corrective impulsive push. We had here which was impulsive and it pulled back, and now we're maybe pulling back to these Fibonacci levels here before price pushes back up. But something that you need to know is that just because I have these Fibonacci levels plotted doesn't mean that I think that there's a 100% chance that price is going to push up. It doesn't mean that I'm definitely right and I'm Mystic Mike. Oh yeah, that's it. I know that price is going to go up from here. No, because there's every chance that I could be wrong and price will just be like, nope, and push all the way down. And that doesn't bother me at all if I am wrong. There's no issue in me being wrong one or two times with my analysis. It makes no difference. I feel a lot of traders get really upset when they plot their analysis and it doesn't play out and they feel that it should, and that it's just not right. That's not what trading is. Trading is about figuring out a pattern, or not just a pattern but some levels, and you just need to know 8 out of 10 times that pattern's going to play out, or 7 out of 10 times that pattern's going to play out. Not 100% of the time, because that isn't trading. That's all made up. That's fantasy. That's all the shit you see on Instagram and all the social medias. That's not what trading is. It's just figuring out over a certain amount of time how are you going to gain an edge with the patterns or key levels that you are trading. So, and I know that these Fibonacci levels most of the time will play out, but it doesn't mean they're going to play out every time. And that's just something to be aware of if you're getting a bit triggered when your trades aren't going in your favor, and well, you just think, well, my analysis says this should happen, so why hasn't it? Because that's not what it is. Just know your numbers and know your edge. But nevertheless, we're gonna have a look and see what's happening over here and see if we can get a buy or opportunity or a sell, because again, we're going to look for some sells down to the level down here. So if we jump into the 1 hour, we can see that prices broke below this Fibonacci level, and it's broke below very, very impulsively. So at this moment in time, I have no reason to be looking for buys until price gives us a clear push up and a pullback. I'm not going to be looking for buys, and in the minute I'm going to be looking for some short-term sells. And I've got my Fibonacci levels plotted on from the top of here to here, and I'm just looking to see if we can complete this like 3-touch pattern here to here, and I'll be looking for a sell down to the levels of down here. And that's really all I'm looking for at the minute with this. All I'm looking at the minute with this trade. in the next, I don't know, week or next week, we could start to come down to here and we could start to look for some buys, or we could push up and look for that buy like I said a minute ago. But for now, I'd be looking for some short-term sells, because if we do come up to, I don't know, there with that 3-touch pattern, there's probably a fair bit of profit to be made down to 6% down to there. And if we could come up to any of these levels further, and so we could make more. So that's all to be looking for really on that pair. But just remember about the analysis. Next pair we're going to look at is Kiwi dollar. And again, it's an uptrend. A lot of the trades at the minute are in an uptrend. Well, the ones I'm covering it anyway. And you can see that we've had price push up, and we're just starting to come back to the Fibonacci level down here. And we have this clear 3-touch pattern as well, which is lining up very nice with that Fibonacci level. So we're going to look for some entries at the area, and we're going to probably take a rejection there. I don't need to wait for a pullback because of it lining up perfectly with the level. And really, this pair, I'm not looking for any short-term sells at the minute, because price would have to pull back to up here. And I'm just looking to see how price reacts to this level. If we come down here and we get a rejection, I'm just going to take an entry, because I know that there's a very high chance that price will just push up from there. And if I try to just, you know, take, and I'm just looking to play a rejection, because I know there's a high probability that price will push up from there. And I'm just going to give myself a big enough stop loss and just let price play out. That one is a really simple one, not really anything else to it. I know that price could break below and then push back in. And also it could just smash through and go to a different level. But for now, that's what I'm looking at. So the last pair we're going to cover is GBN, and quite an important lesson on GBN. So here's a question. How many people, how many of you had this double top plotted in? Maybe, I don't know, you call it support, resistance, whatever you call it. But you had this level in here, and you said you knew that price was going to hit this level and then price was going to drop. And that's exactly what happened. How many of you did that and thought that, but you still didn't get involved in the trade? And instead of actually counting the money you've made, you just have to go put your shorts, like, you know, put your short tool on and just count the money you could have made instead of the money you've actually made. And how many of you do that and do that consistently? And this is a massive thing. This is a massive problem, and it happens so much for new traders and people that are learning a new trading technique. And you get caught in a massive trap with this, because what happens is you start learning about trading and you go to technical analysis. You start learning a new trading technique from a course online, whatever it is, and you start learning a new technical analysis. And you start plotting on your analysis, and then you start seeing all these trades that, oh my God, I plotted this, and now all of a sudden price has done exactly that. And now you think, oh yes, this is it, this is the one, this is the holy grail. Oh, trading is easy. You start writing up your notice to leave work, because you've done it, you've figured it all out. All you got to do is finish off that book, finish off that course, read the next page, and that's it. You're the best trader. And you just do that, and then, you know, a couple months later, it's still the same thing, where you're still missing out on those trades, because it's not the analysis, it's your head. It's your head, and you have to reapply for that job, because you ain't going to be leaving yet. And there's 4 main reasons, I think, to why this actually happens. And the first one is quite an obvious one, a very, very common one, and that is you're scared of losing money. This one's simple. Like, most people are scared of losing money, and in trading, if you're risking too much or you're risking money you can't afford to lose, this is a big reason to why you're going to be scared of losing money. If you're risking more than 1% of trade, if you're risking 50% of your trade, which I see some people doing, which is crazy, no shit, you're going to be scared of putting on the trade. And if you're risking too much of your own capital, then, you know, of course, again, you're going to be scared of losing trade. It's a sprint, not a marathon, not a sprint. So don't worry, you don't need to put all your money in, because you're not just going to be rich overnight. And the next reason, which I think is a really, really big reason, is that you're not scared of losing money, but you yourself are scared of being wrong. So when you start learning about all these techniques and you start learning about technical analysis, and you think that analysis is the main thing, and that's what's going to make you a great trader is your analysis, and you start plotting all this analysis, and you think that that analysis has to be right. If you plot this double top in and you think that that is it, that has to be right. You're clever, you plotted this double top and you've predicted the market, you think you know exactly what's going to happen, and then it doesn't do that. That means that if you think you were right and that the market had to do that, that then means that you were wrong, and you start doubting yourself. You doubt the strategy, you start to doubt your intelligence, you doubt whether you're good enough at trading. Are you going to be a good trader? Because you're not understanding how it actually works. If you thought to yourself, well, okay, I know that there's an 80% chance that this trade could play out, but I also know that it might not, you're no longer thinking to yourself, I have to be right. It's just, well, I know there's a chance it plays out. And if it doesn't, you're not wrong. Your edge just didn't play out this one time. And that's something that happened to me a lot when I first started trading. Like the first year, even when I was on demo account, I was scared to take trades. Obviously not because I was losing money, but I was just scared of being wrong. And until I drilled that into my head, I just kept on not taking trades. And I really had to drill it into my head. And then all of a sudden I started seeing the change in results when I stopped caring about that and I stopped letting it affect me. So that's something you really need to be aware of if that's something that you're going through yourself, as it's very common and it is a pain. And you just really need to understand it, otherwise you're just going to go in circles constantly. Third reason that you may not be getting involved is that obviously a lot of people start on the daily. They use the hard time frame structure to find the overall bias of the market. So you plot the double top in the daily, and then you've got to drill down to the 1 hour and find your entries, and that's where a lot of the mind stuff comes in, because in the 1 hour so much can happen. There's so many different styles of entry. Price could hit the top and then drop. It could break above. It could not quite reach. It could go up, then double top, arc round, and then drop. And if you don't have a good entry strategy for how you get involved in the markets, then you're going to get caught out a lot and you're going to end up missing a lot of trades. Same with a management. Price could drop, take you to 2%, then come back up to 0% and then drop again. And there's so many things that can happen, and in the daily you won't see those things. So you have to have a really good entry strategy, otherwise again you're going to be caught out. And the last reason that maybe you missed out on this trade is because it wasn't in your plan. And if it's not in your plan, then there's no problem. I feel like a lot of traders if they see price go without them, they get really upset. Even if there's no trade in your trading plan, they get really angry because they feel that, oh my God, I should be getting that. Any drop they should be getting. No, if you're profitable and you're consistent, it doesn't matter. If you're making 5, 10, 15% a month, who cares if you're missing like percentage? You can't catch every trade. Obviously, if you're not consistent and every month you're seeing like a common pattern where price drops, then yeah, go do some back testing and have a look to see if maybe you can incorporate into your plan and figure out the numbers. But if it's not in your plan and you don't need to, don't worry about every single drop, because you can't catch all the drops. I feel like Instagram and social media and stuff like that is a massive thing for this, because as soon as you open it up, you see, oh, this rich kid who's made 100% in a day and he's just picking up his new Lambo. And in reality, that's just not true. They're just like, there isn't anyone doing that. They're just people that are probably rich in the first place, exploiting trading is an easy way to make more money. You really have to understand that. There's no one making 100% a day. There's no one even making 50% a day, 20% a day, or even a month. There's no one making 50% a month, because if there were, they'd be like the richest people on the planet. Use a compound interest calculator and figure it out for yourself. If they made 50% a day, even off £1,000, they'd be the richest people on the planet in like 15 years. And they're not, and there's no one of that yet. So try not to be like blindsided by all that. Try to see through all the social media shit. Obviously there are some good people on there that do so much, but for every one good person on there, there's a lot of shit, and you really have to see through that. But let's get back to the analysis. And so on this pair, what are we looking at? So we've hit the double top. I originally thought we could hit the double top and then drop, or we could come up to this Fibonacci level up here. And we could still do that, because even though, yes, we've started to push down, you can clearly see the price is pushed up. And now we're starting to get this sideways correction here. So possible the price does actually, not going to do that, but price double tops at this level, double bottoms at this level, and then maybe pushes back up to come up further. But we'll just wait and see what price tells us before we look at that. So if we drop down to the 1 hour, we can have a look. and see. Yeah, not really much going on at the minute, to be honest, if I use a 4 hour to plot my fib. So all I really want to be looking for is some clear price action to one of these Fibonacci levels. And at the minute, I haven't really got much. And I'll just be looking for a clear pattern to one of these levels. And that's really it for that pair. I spent more time talking about other stuff on it because the analysis is quite simple. All you want to be looking for is some clear price action to one of these levels. That's it. But that's the breakdown this week. I tried to add a few more lessons or tips for your like mindset, because the last few weeks I've just been doing an analysis, and as great as analysis is all about your head, innit? You definitely most likely heard that, and it is very true. When I first started trading, I thought, nah, it's not. They don't even know what they're on about. Even though a lot of the courses I did, these people are very, very wealthy. And I'm thinking, nah, I don't need to do that. I'll just do what I want. Turns out I actually did need to do the mindset stuff as well. But anyway, that's the end of this one. I'll see you next week.